Today I'm here to introduce the Investment Roundtable and to release some of the findings of our latest study, the EU Space Economics in the Global Context, performed for the European Commission, Department of Defence, Industry and Space. The study provides a comprehensive outlook of the global and European space sector economics and trends, including an in-depth analysis of the new space phenomenon. It will be published by the end of the month by DigiDevis. Stay tuned. In the last 10 years, the global space economy has grown by 6% per year to $400 billion, and it is expected to reach over $1 trillion by 2040. The space sector is undergoing an incredible transformation and development on a global scale, driven by new space. Major technological advancement, a new entrepreneurial spirit, and a renewed policy focus have put the space sector on the spotlight of the global innovation stage. Such rapid and constant transformation calls for new approaches to funding, policy, and supporting to the space industry. In this new context, a disruptive, commercially driven approach to space has emerged, marked by ambitious announcements and endeavors aiming to engage in space markets with innovative schemes and business models. As things stand, private actors play a different, more prominent role both in the implementation of public programs and the conduct of space business independently from governments. The new space phenomenon has been particularly contributed to this transformation and growth. We define new space as a global trend encompassing a series of technological and business model innovations, leading to a reduction in cost, shorter life cycles, and a bolder approach to risk-taking in the space sector. New space results in, therefore, lowering the barriers for entry into space by providing cheaper access to space and more high-quality, affordable data from space that can be used on Earth for the benefits of scientists, businesses, public institutions, and the general public. To introduce Investment Roundtable, I'd like to draw your attention on a few simple considerations. Private investment in space ventures have been booming over the last 10 years. At the beginning of traditional space, entering the space market for a commercial company was something unimaginable. Venture capital funds were not inclined to invest since the return on investment was too low, too risky, and too slow. Therefore, space companies were initially state-owned or had a strong participation by institutional entities. The possibilities provided by the combination of wealthy entrepreneurial personalities and well-networked venture capital investors in the Western United States, supported by space policy oriented to commercialization and the huge demand from the military and security authorities, were crucial. Success stories like SpaceX are attracting new founders, incentivizing the VC scene and facilitating the financing of so-called disruptive technologies and business models. This led to several VC funds focused only on space, willing to bet millions of dollars on space startups. However, a comparable continuous finance chain like in the US with fast and risk-taking decision culture is yet to exist in continental Europe. We will hear more in the panel. Over $27 billion were invested globally in space ventures during the period 2000-2019, on average over $1.3 billion per year, with 50% invested from 2013 to 2018 and $5.7 billion invested in 2019 alone. Dedicated to fostering the emergence and growth of commercial industry, US private investment alone is higher than all available European funds to support industry competitiveness and innovation put together. Another trend undergoing in the space industry and beyond is the increasing number of special purpose acquisition companies, SPACs, deals, which enable space companies to reduce complexity and time to IPO. To date, there have been about 10 SPAC deals announced to bring space companies public, with a cumulative value of over $10 billion. The first example of a SPAC deal in the space sector was Virgin Galactic's merger with social capital Sophia in 2019 for $2.3 billion. Another notable example is Rocket Lab, who merged with Vector Acquisition for $4.8 billion. Without further ado, it's my pleasure to introduce my colleague Thomas Stange, who is leading our innovation practice at Space Tech. Thomas helps our clients to build entrepreneurial ecosystem around their space programs, and he has worked on space startup investment since 2012, both on the startup and investor side.
Thank you, Carla. That was really insightful, and we will continue these topics in our roundtable. But before we do so, let me introduce the panelists of today. I have the pleasure to welcome Bogdan Gogulan, CEO and Managing Partner of NewSpace Capital, the first growth stage VC fund in the world based in Luxembourg. And as the name indicates, the fund is specialized in space investments. NewSpace Capital's portfolio includes most notably ICEYE, the SARS satellite constellation that recently joined the Copernicus program. Welcome, Bogdan.
Great to be here.
Moving east, we have kindly invited Elodie Robin-Guillerme, calling in from Dubai. Elodie has been supporting the ecosystem in the region through the Gotham's Hub 71 accelerator program dedicated to early stage aerospace startups in partnership with Mubadala. She also backs entrepreneurs with investment as a founder of Alidade Ventures. Welcome to our panel.
Hi.
Our next panelist will provide insights from Japan. Welcome to Hide Aoki. Hide is a director at Global Brain in charge of space and robotics. Global Brain is one of the largest VC firms based in Japan and has about 10 space startups in its portfolio. Hide is also an activist for space entrepreneurship in Japan as a co-founder of Space Style Foundation and Spaceport Japan Association. Thank you for joining.
Nice to be here.
And joining us from the other side of the globe, we have Martin Duursma, based in Sydney. Martin is a partner at Main Sequence Ventures, managing a VC fund that is focused on solving some of the biggest problems on planet Earth, and space is seen as one of the key investment teams to solve these. Among others, their space investments include Myriota, the constellation for the Internet of Things. I'm sorry for the inconvenient time, Martin, and I hope you have a double espresso with you.
Indeed, very nice to be here. Thank you for inviting me.
I've noted from Carla's keynote that the space economy is growing, and also private investments in space have been growing tremendously in the last 5-6 years. In Europe, we see an emergence of a number of space funds or investment funds that are solely focused on space. And we hear a lot about space investments in the US. So today what I want to do is I want to explore with you what is current in the rest of the world. So I would like to explore with you both the status quo of space investment landscape in your regions, as well as the characteristics or measures that have enabled your ecosystem to mature for VC investment in the sector. Bogdan, if you allow me to start the panel with you as the only pure space-focused VC fund in the panel, what is your investment hypothesis for space today? What has changed in recent years that we see this growth of VC investment?
Thank you for the question, and please allow me to start with the second part of it. So primarily there were 4 things that has been driving the surge of investment. So firstly, it's of course changes on the supply side around the launchers and the satellite platforms. So the fact that the launch price went down by 95% in the last 10-12 years, primarily thanks to the innovation of SpaceX, the fact that now it's possible to launch things to space not for $50,000 per kilo, but $2,500 per kilo. And also the fact that it's reliable. There are more launches. You don't have to wait for 2 years for launch. You can just book something a few months in advance, and it's something that is also user-friendly for the companies. So this barrier for entry has been significantly lowered, and now time to market is becoming much shorter. On the satellite platforms, also the fact that for the emergence of small sats, and so the utilization of the low Earth orbit, and the reduction in the price of satellites from hundreds of millions to hundreds of thousands, there's been a significant impact on the supply side. Then on the demand side, since it became cheaper, faster, and better to provide things from space, on the demand side, the demand for space-based applications and services significantly increased. And it happened at the time when a lot of terrestrial technologies and the digitalization that has been happening over the last 10-15 years sort of reached a certain ceiling. We've done, or in many areas, we've done what we could have done terrestrially, and we just needed sort of a new technological frontier to unlock some of the efficiencies and productivity in the existing industries. It looked like transportation, like agriculture. So the fact that precision agriculture is definitely driven by Earth observation and by global positioning applications that are space-based applications are just one of the examples. And to what Martin does, and I'm sure that he's going to talk about that in more detail, feeding 10 billion people, that's only possible with the significant advancement in agriculture that is enabled by space-based applications. So that would be the second enabler. And then the third one is, I think what's very important is that the regulators around the world, they realize that the emergence of the commercial space requires a new regulatory framework. On one hand, actually removing regulatory barriers, and then on another hand, providing a regulatory framework for the commercial space activities. And that's been done quite successfully across various countries, US, Luxembourg, UAE, but then also Artemis Accords, and just the cooperation between the space agency, emergence of space agencies in many countries like Australia and others that are more commercially focused rather than just research driven. And then finally, the fourth one, I think what's been happening in the financial markets over the last 12 months with a number of companies going public in the space area that show the maturity that the space market is really, commercial space market is really maturing. And right now governments are just 40% of the space market. So the majority of the activities are actually commercial, but there wasn't so many IPOs. And now this happening really shows that the market is maturing. Though a lot of these IPOs are actually SPACs, and there is a question, is there a bubble? Will it burst? And there is a mixed bag in our own opinion. Look, there's kind of the good, the bad, and the ugly. We don't believe in the substance or behind all of those SPACs. But even if it does burst, it's not the question of, oh, look, that's the end of space era. No, it's like with .com. When it bursted, it didn't mean that digitalization stopped. It was just showed that, look, there is maturation in the market and people start understanding the fundamentals behind the companies. And that's a good thing.
I just want to pick up on what you said, that there is a stronger demand that you see the demand side as one of the key drivers for you to have the space opportunity there. Martin, I just wanted to check in with you as a pure play space investor. Was this demand side what sparked you to become an investor in space technologies?
What we saw was that space itself is becoming more accessible through some of the things that Bogdan mentioned earlier. We started to see that launch was getting cheaper, and what it meant was that there's now this sort of innovation of new ideas and new opportunities, and startups are starting to merge to take advantage of the ability you can actually get things into space for low cost. You can experiment, you can try new things, and that was sort of one of the drivers around us thinking about space as an opportunity. But also, I think here in the Australian context, it's probably interesting to note that Australia has been quite involved in the space ecosystem all the way from the 60s, because we were running the NASA Deep Space Tracking Network, and some of those pictures from the moon when Neil Armstrong did those first steps, they were actually transferred through a ground station here in Australia. But then since those early days in the 60s, we sort of haven't really done a lot in the space industry here in Australia. And it's really only in the last 4 years that, and you mentioned it earlier, that we really started to understand that space is a big commercial opportunity. It's a jobs and growth opportunity. And we had the Australian Space Agency started here with a stated goal of 20,000 new jobs by 2030. And so that's when Main Sequence 4 years ago, we started the fund. We had that same thesis. We're seeing the commercial applications, we're seeing new EO applications, we're seeing new terrestrial applications of space-based technologies. And that's what really led us to move into this area.
Thank you. Hide, we see that Japan is at the forefront of emerging space domains with space startups active in space debris removal, space resource mining, and even robotics for lunar and Mars settlements. What is the investment opportunity of space that you see as a general tech investor, especially in these emerging space domains?
Many Japanese startups have already succeeded in raising large sums of money. And we have many unique companies in Japan that are leading the world, such as debris removal, lunar landers, and even space robotics, and some other sectors as well. And what's interesting is that the companies and investors who have been involved in non-space industry, such as automobile industry, are now starting to look at space as a new investment target. So these investors believe that the the technology and human resources that they have cultivated in the automotive industry can be utilized in space business, and the people and money are flowing into this space business market. For example, Toyota, Japan's largest automobile company, has established a dedicated space fund in Japan. And in the past 5 years or so, more than 50 major Japanese corporates or corporate VCs have started investing in space startups. That actually the number is greater than the number of Japanese VCs invested into space. So there's a huge trend of creating new businesses and technologies by merging space and non-space industries.
Thank you, Hide. Elodie, you're based in the UAE. Do you see the same kind of spillover effects of non-space to space in the region, or where's the innovation in the region coming from that you see?
The way we are trying to build our ecosystem in the UAE is a bit different. The point is that the push is coming from the government, and the push is coming from the government because we are doing everything we can do to move the economy away from the oil economy. So our objective in building a space ecosystem is really to support the diversification of the economy and to see also how we can launch a knowledge economy in the UAE. So our point is more to see how we can, and that was, the issue that we had when we started 3 years ago. So this is a very nascent ecosystem, and we are really at the beginning of our journey in the UAE. But when we started, the point was that, okay, we need to push everything at the same time in the ecosystem. I'm not even talking about investment. I'm talking about companies and ecosystem to invest in, Mm-hmm. So we started on one side by attracting, deep tech companies to come to the UAE and to be sure that we're putting together a strong value proposition compared to more mature ecosystem. And that's where I would join what Bogdan was saying regarding regulators. That's where we are very strong in the UAE. We have the regulators on our side, and we have also a lot of government agencies sharing with us, our support on innovation and on adopting new technology. So that's where we can really fast track use cases, having the support of the different government agencies. On the other side, we are trying, of course, also to nurture a local ecosystem of startups. And for that, we need also to grow our R&D ecosystem. So we are really pushing everything at the same time, which is a complex equation, I would say, and trying to rely on what maybe the UAE is one of the best countries in the world to do, rely on a very strong network of partners and international partners. So each time that we have a pain point in our ecosystem, what we are doing is that we rely on a network of international partners to be able to bring in this expertise in this country and letting the time to mature, these different pillars of the ecosystem at the same time. Regarding investment, what we are doing also is really to see how we can, because we're not talking only about space, we're starting our VC journey only a couple of years ago in the UAE, and of course, as you can imagine, we didn't start it with space. So what we are doing also is spending a lot of time, to educate the local VCs in what does it mean investing into space. And that's definitely where it's very interesting to tap into non-space application. And especially there is a topic which is very crucial and strategic for the UAE, which is around sustainability, everything linked to food tech, agri-tech, water scarcity, resilient infrastructure. You can imagine that in our part of the world, when we are talking about sustainability and climate impact, this is a main challenge because we are already starting from very high temperature in summer. And And that's where it's very interesting for us in the type of technology we are supporting, because we are totally aligned also with the R&D program from the Dubai government R&D center, Mohammed bin Rashid Space Center. So that's how we manage, to make it work and to start our journey in a successful way.
Thank you. Martin, also with you, I'd like to understand a bit more about your ecosystem. Having sufficient deal flow for investment in space is highly reliant on your ecosystem that your fund targets from a geographical viewpoint. We've seen a lot of movement in Australia where you're based. What's unique about your local ecosystems? What can the other countries learn from your approach in Australia?
Look, I think the thing that's unique here about our ecosystem is that our space industry is sort of being rebooted, from about 4 years ago, which means we don't have any legacy incumbents. So everything is new and it's vibrant, it's interesting, exciting. The other thing I think that's unique about Australia is that we have a very strong research sector. So when we look at the university sector here in Australia, we rank top quartile OECD from a research capability. So there's a lot of latent, skilled research engineering talent that's here. The challenge that we have is how do we connect that to commercial opportunities? And that's actually one of the core theses in our fund, which is we're working with the university sector, with researchers, looking for capability there and bringing that forward into commercial opportunities. And one of the unique things that we do at Main Sequence is we don't just invest in companies, we actually create companies. And so a good example of that is one of our recent investments is a company called Quasar Satellite Technology that is building a phased array ground station. So it's addressing the challenge of thousands of LEO satellites. Instead of having hundreds of dishes to talk to them, you have one dish that can talk to many hundreds of satellites at the same time. And that's technology that came out of one of our research organizations that had been working on that technology for many years. So we married that, we see the commercial opportunity. Main Sequence created a company, brought that technology in, brought in a CEO, a team, and other capital behind it. And so that's how we're starting to bootstrap or bring new, companies, into the market. Not just startups that are coming to us, but we're also actively creating things. So that's maybe some of the unique things that's going on here.
Thank you, Martin. Elodie, maybe to round up the discussion on the ecosystem, you're also you're also based in an area with lots of emerging space nations in the Middle East. The space opportunities there are also much on the radar, as you mentioned. What are the investment drivers in the region? What are the expectations from space investments in your ecosystem?
The most important for us is how we are able to bring technology to the country to create more employment here on the ground for our people. So the objective is really to see how the company can be local and what they can bring to the current assets that we have in the country. So that's a question, that I have a lot, as you can imagine, especially during this week, is that, during the ISC, we've been seeing a lot of foreign startup looking at the region, and maybe trying to get some business traction here in the ground. But the point is that if you are not a local company and you are not really resilient in supporting the vision of our government, it will be very difficult for you and challenging to tap into our local investments. So that's really the main focus for us. It will not be really dedicated to the type of technology or the type of sector or business application. It will be really also your alignment and your commitment to the vision pushed by our government.
Martin, your portfolio contains a number of deep tech startups. I'm interested to learn whether investing in space companies is any different. Are you looking for the same return periods, the same risk profiles? Do you have a different approach in your due diligence process? Is it any different or it's all the same?
Our definition of deep tech, as I mentioned earlier, is a company that has a connection to research or is spinning out of a university, solving what we call a wicked engineering problem. And, our venture fund here, it's a 10-year fund. And the funds are each 10 years. So we have long time horizons. And so all deep tech companies, take a while to mature. It's not like writing a software SaaS application, you get it in the market within 3 months. So we're very comfortable with companies that take 2 or 3 years raising the TRL readiness of a product before they get into market. And space companies are often like that. So, that's very common across the deep tech ecosystem. So I think to answer what you're saying, we consider space just as hard as any other deep tech sector. And we have the same sorts of return profiles that we're looking for in our companies. Generally, as a VC, when we invest in a company, we want to see that there's a potential for a $100 million revenue stream in 5 to 7 years with a multi-billion-dollar valuation. At least that's the thesis going in with every investment. So if we can't see that as an opportunity, that's where we won't invest. So when we look at space startups, we see a lot of space startups in our region here that are technologists or engineers that have got a great idea around some component or some enhancement. It's not a complete end-to-end solution, and they're the ones that are difficult. Well, they typically wouldn't become a VC investment. Typically, we would try and steer them towards working with another company to try and be a bigger thing. And so if you look at the companies that are in our portfolio there today, they have sort of an end-to-end solution. They're providing a direct end-user customer type capability that's coming from space or a space technology. So that's probably the characteristic of how we look at companies and how we diligence whether we're going to invest.
Hide-san, can I ask you the same question? Are your colleagues that invest more in SaaS solutions looking at the things that you do as something a little bit odd, or is basically the due diligence process for you with your space portfolio not that out of the ordinary?
A basic due diligence process is pretty much the same, but we do have a little bit of spice when we do the due diligence for deep tech focused startups, especially if they're making a hardware, we have to do the hardware due diligence. Of course, if they're working on the software, we do the software based due diligence as well. But we go visit the lab and their factories if they're manufacturing on their own, and evaluate how good they are developing or how good they are manufacturing.
Bogdan, when discussing with the fund of fund investors of your funds, what do these limited partners think of the space opportunity? What has changed in the LP landscape vis-a-vis space investments? Are institutional investors interested in space today?
There are a few things that changed in the last, say, 4 to 5 years. One, they're definitely interested, every single one of them. So, which wasn't necessarily the case 5 years ago. 5 years ago, they were sort of shying a little bit away from it, most of them. And the ones that were interested kind of couldn't think beyond rockets. So one is that now there is definitely broader interest. Two, there is the same as there is a growing maturity of the market, there is also growing maturity of investor interest. So now investors, as I said, they sort of start thinking beyond rockets. And look, launch is just about 2 to 6% of the market, depending on the year. But it goes 75% of investment. Yeah, more than 100 billion has been invested into launch. So there is over 174 companies developing some sort of launch technology right now. And one thing in space is, like everyone is asking, well, what's the recipe for success? I'm not sure, but I can tell you what's the recipe for disaster is trying to repeat someone else's success. So trying to become the second SpaceX is not working. And I think LPs also now, when they're talking to, so the funds of funds, when they're talking to funds like ours, they basically want to see that, well, the investment strategy is much broader than just rockets. That's one. Two, they also start thinking further than just the startups. They understand that growth stage is a crucial piece of the puzzle, because, well, technology is solved, the market problem is solved, the companies kind of grew out of a technology phase into the being a company, having recurring commercial revenue. And then they will realize that, well, companies, this is actually when companies start scaling and really start having impact on the economy. And so it is crucial to have this piece of the puzzle. And at the moment, in pretty much every market around the world, it was the death valley for the space companies, because the companies sort of out of the investment stage where people like early stage investors, tech investors who understand what the company is doing have invested. But they're not yet into the stage where the financial investors that don't understand the underlying technology can just judge the company based on their financials. And so that niche, now it's interesting to see the institutional investors specifically being interested in that niche and having an intelligent conversation about that. And then finally, I think it's very interesting to see institutional investors asking, what's the spillover? okay, well, great, space, it's cool, it's very interesting. What is the spillover? How is it going to impact the economy? So everyone kind of goes beyond of just cool tech and understanding that space is a huge lever of the future growth of the economy, job creation of high paid jobs, educated jobs. And they're looking for this spillover. They understand that the most challenging technically challenging specification comes from space, but the technology developed for it then can be spilled over into other industries, and they're looking for that as well. So it's much more interesting discussion with the institutional investors now versus even 2-3 years ago.
I 100% agree with what Bogdan's saying there about what are the spillover applications. We actually take that even further in that many times we'll see a space startup that's wanting to do something for a mission-orientated type thing. It might be part of one of the Moon to Mars mission capabilities or something like that. And our first conversation with them is around, well, that's great. However, what's the terrestrial application of the technology you're developing? How can that technology actually be a big business and actually start you off with commercial revenue? Because that Moon mission or that Mars mission, that's many years down the track. It's probably going to be a one-off or a two-off or a three-off. That's not a sustainable commercial business. So we're very orientated on that. What is that commercial terrestrial application? And an example here in Australia is that we have obviously a strong mining industry that has for many years developed lots of robotic technologies, a lot of remote operation technologies. And so just like Hida, you were talking about in Japan, you've got startups that are doing rover and moon proposals. Great, but let's take that back into a local context. How can you use some of those things you're developing there? For example, harsh environments, difficult places, what's that scalable commercial? And then let's keep that space thing in mind. But I think that as an investor is the way that we have to try and prove out these companies with that dual revenue stream.
If I may add something, if you're looking for harsh environment, please come to the UAE. We're here.
Indeed, very hot.
I think with what is very interesting also is that, as you were saying, a couple of, I would say even months ago, most of the startups were were working on very disruptive technologies, were trying to sustain themselves through R&D budget coming from space agencies. Now we see it the other way around. You have this kind of, for example, habitat startups who are who are looking for first traction for application, under the sea or this kind of application to be able to grow and scale their companies. And of course, they call themselves a space startup because they are looking at a colony on the moon or on Mars, but they know that this should not be supported, by R&D project, but it should start with the terrestrial application and after move to the space application. So it is really the other way around.
Elodie, if I may continue with you, you worked with early stage startups and you anticipated my question a little bit. Do space startups need more than investments? Do they need other types of support? Where do they struggle?
There is a long list, of struggle, but I think that's why we are here. We love the challenges. I think for me, the most painful thing is really when you are trying to move away from a SaaS business model. And when we are trying, especially when we are talking about sustainability, everything linked to this program on putting colony on other planets, everything is very linked to hardware. And this kind of technology, to be honest, are not ticking the box of the current VCs. So there is a kind of, as Bogdan was saying, of a death valley, which is very difficult for them to go through, because in fact, to be able to prove that technology, they need very heavy investment to be able to grow their manufacturing part. And on the other side, no one wants to invest a couple of dozens of millions in a factory if you don't have already some traction and a proven market. So there is a kind of chicken and eggs, game, which is very, very difficult to crack for this kind of companies.
What Elodie was saying about capital, a lot of these space startups are hardware. There's a lot of hardware, a lot of capital intensity there that you need to find the right investor that's prepared to back that company for a number of rounds, because each time, and then you've got to be very careful at the proof points, because unlike other types of businesses, you might have to do a couple of rounds, 2 or 3 rounds of capital into the business before even they've got product market fit or actually are getting something into the hands of the customer. So I think for a VC, you need conviction about the team, the opportunity, and it's not for the faint-hearted, because you are putting significant amounts of capital in before you start to see maybe that first customer capability.
You need most of the time to support this young startup with connection within the industry. So it's not a lot. It's not only about investment, and pure investment. It's also how you can support with industry connection, more and more use cases and partnerships. And for this, you need a batch of partners who are coming from the industry and not only with a financial background.
You both mentioned that it's important to have, that you're able to accompany the startups along their journey, also having the firing power for several investment rounds. Bogdan, you come at a later stage in the investment. What is your perspective on why did you choose for the later stage investment versus the early stage investment?
Look, actually, a number of reasons. And one is that it's the most underinvested part of the journey of the companies, and because it's significantly underinvested, we also see a number of companies undervalued, specifically outside of the US, and then also it is the part of their journey where the technical risk is out, the market risk is out. But then the risk return profile is actually, so risk is taken care of, and so the risk return profile becomes greatly skewed to the part of return rather than risk. If the execution is correct, and this is where we are looking at the company, do they have the traction on the execution? Is this the right company to take it to the next stage? And then our job is really to help these companies that have sort of growing business, help them with the working capital through their journey, help them to scale and prepare them to the public markets. And I think this is very important part. A lot of companies underestimate how much work they have to, after they've put so much work into the product, then making product into a business, and then they a lot of times underestimate how much time and effort they actually have to put into make it into a scalable and company that is ready for public markets, in terms of the financial framework, in terms of the governance framework, in terms of the partner network, in terms of how they run the company. And so this is something that we can help them just because of the experience of the team of building one of the world's largest space company, having 150 years of experience in this industry, both on the commercial and investment side. So this is where we can help them. And also, this is the part of the journey where really you can distinguish companies by those who are great and those who are market leaders. And I think one thing that is important to understand about this, the space, is the opportunity is huge, but for many market niches, it's really it's going to be space for 1, 2, maybe 3 companies. But if I may, just to break the spirit of agreement around the table, maybe slightly disagree with Elodie's remarks on the niche, that it is a really niche industry. I think what's important is to understand that it's a global industry, and I think in various places, that industry actually can be quite different. And what is a niche in some places, and I think Elodie is absolutely right in terms of Middle East, specifically UAE. I think it's a little bit more niche. But if we look, for example, in Europe, what is great about many companies, specifically in the supply chain, is those companies, they're going to be supplying to so many industries. Space is just going to be one of them. And that's where it's also interesting to see a lot of the companies, mature companies, even with 20, 30 years of experience, great track record, but it's just now they're facing rapidly growing market and they need working capital for it. So the challenges, and you all the time, Thomas, asking about the challenges and what companies need, it really is going to greatly vary from market to market, and then from various niches in the space ecosystem, because they are at various level of maturity.
Does anyone of the panelists want to react?
I might just say something regarding supply chain, Bogdan, that you mentioned. And there's a particular challenge around space supply chain that we have here in the Australian context, in that, we've got a growing space industry, and often some of the space hardware that's required would be coming from an overseas company. So it might be a component from a European supplier or from a US supplier. And obviously in the last 2 years with COVID and now international shipping delays and transportation delays, that is actually probably a challenge for some of our companies here in Australia, because it's taking longer for fabrication. It's taking longer to get things, over into this part of the world. Whereas pre-COVID, our global supply chain was much smoother, right? It was very easy. International shipping was just easy. It just happened. It was never a problem. Now you've got to take that into account with pretty much everything you do. How long is it going to take? Why is it going to cost more? Or the company that you contracted to do something has had impact because staff have been off, or et cetera. So to us here in Australia, it's forcing more local investment in local supply chain capability, which is a good thing, but it's still going to take a number of years to get it up to the level that's required.
And, it's really interesting, Martin, that challenge, so challenge for someone is an opportunity for someone else. And it's great to see the whole problem with the global logistical system brought interesting product development. Companies that are using Earth observation, geopositioning, combining that together to better understand what's happening with the supply chain, how to smooth it, how to make it better. And there are very interesting applications that are coming out of specifically, our industry that make it smoother. So, it's interesting to see how some people manage to capture that opportunity.
Hide, maybe to conclude the panel, we talked about market segments just before. Where do you see the space sector go from your perspective? What is in store for us for the coming decade? It's time to get out our crystal balls.
That's a fun question, actually. At the moment, many space startups are trying to raise funds and are still in the process of trying to demonstrate their technologies. And in a few years, many of them will move into the stage of full-scale revenue generation. This will create a virtuous cycle of new startups and successful companies supporting startups. This will eventually create normal ecosystem. So it is still undeniable that many space startups are currently depending on the government. However, I believe that in 10 years' time, private space business will be big enough to generate revenue through a hybrid of government and private sectors. Of course, consumer market such as space travel will also grow, and we may live in an age where anybody can go to space. And one more thing I want to add is that everyone needs to think about sustainability of space environment. Besides space debris issues, we have to think about what kind of objects we are going to launch into space. In that sense, I have recently announced an investment into a company called Pale Blue, which is developing a water-based propulsion system for microsatellites. So the consideration of sustainability will be a must for every space person.
Great. I think sustainability is close at heart of many people in many industries, luckily. So that's great to hear. Any other insights from the other panelists before we conclude?
I must say, I think our colleagues, he just gave a perfect wrap up to the session. And just I want to say I completely agree with everything that has been said. One thing I think what's very important is there is going to be a more diverse internationally development of the space ecosystem. And so far, I think there was a sort of disproportionately high focus on the US, that of course one of the largest market. But what's great to see is the development that's happening in the UAE, development that is happening in Australia. We see fantastic companies out of South Africa. We have fantastic companies out of Israel. China is, of course, such a charge on the space ecosystem. Singapore, Japan. So it's really becoming much more international. We see a lot of movement of talent globally. We see much more international cooperation. and it's fantastic. And I think we're just going to see even more of that. New nations coming, mapping themselves on the space map, and putting themselves on the space map, and it's exciting.
Thank you very much, Bogdan. I'm afraid this wraps up our time here for the roundtable today. Thank you so much for joining us today. I wish we had more time to discuss. This was really interesting, and I hope to meet you all soon again in person.
Thank you.
Thank you.
Thank you.